start कर हो गया
My dear friends, we are all well in the webinar on Untitled Chapter 9, that is N1 under GST. Let me make the preamble about the significance of this. We normally file income tax return under income tax on basis, clearing our income, and not only annual income, but nowadays the details and liabilities, etc. also in forms. In case of tax audit, there is a Form 3CD coupled with the income contained in the audited balance sheet, and then with the IR form, which is now so much of detail. The revenue authorities are in to capture wide informations of making self-assessment, encouraged by the information received in the ITR, and onward successful self-assessments made self-processing units. The lawmakers are satisfied. So encouraged with the success of ITR and Form 3CD, the CB also become prudent and aware that in the times to come, it won't be possible to depute loan assessing officers for the purposes of making face-to-face assessment. Not only that, they also doubt the integrity of the officers, whether the officers touch the while doing the assessment or not. So keeping all these factors in view, they have designed one form GSTR 9 under GST, which is valid, as well as for taxpayers whose turnover is more than 2 crores of rupees. They have been the provisions earlier the telling of whether GST audit come in the very first, it may be coordinated for a couple of years since the provisions of GST are quite complex. The tax department officials as well as the taxpayers are grooming themselves to adapt the ticklishes of the new law, and it was at occasion was considered even the GST Council or by the CBC, whether in format or its simplified format, the provisions of GST audit of the return should be written. Finally, this Form 9 looks simple. Various tables and cells face lots of challenges. to capture information, whether it should be the books of accounts, or it should be from GSTR 1, or it should be from GSTR 3B, and specifically SME on and off are making mistakes and errors while filing these returns because of uh, normally the kind of create is and the kind of this SMEs do. They settle the invoices if when the customer finds. So in this perspective, it is becoming quite complex to understand how this form fill up this form. Let me give at a glance about the provisions being contained in the law about the concept as well as in the evidence. First of all, we see accounts and records. This particular chapter is contained in the chapter 8 of CGST law, and this chapter contains section and section 35 says that every registered person whose turnover during a financial year exceeds the prescribed shall get his accounts audited by a chartered accountant or a coast accountant and shall submit a copy of the audited annual accounts, the reconciliation statement under section 44(2), and such other documents, such form and manner as prescribed. So the law has mandated the power of doing audit under section 35(5), and if we read this particular subsection, we find that a taxpayer is required to submit his audited accounts under other provisions of law, maybe Companies Act, maybe income tax. The auditor's report in the form of reconciliation statements under GST and then annual return. Means three kinds of documents are to be submitted by a taxpayer who's exceeding one, the audited annual accounts under other statutes, two, a reconciliation statement in Form 9C, and third is the Section 44 says that every registered person other than a person paying tax in Section 52, a casual taxable person, a non-resident taxable person shall furnish an annual return for every financial year electronically in such form and manner and as may be prescribed on or before the 31st December following the end of the financial year. So this section 44, subsection 1 is talking about the furnishing of annual return for every financial year. Thereafter, section 44(2) says that every registered person who is required to get his accounts audited in accordance with the provisions of section 35(5) shall furnish electronically the annual return under subsection 1 along with a copy of the audited annual accounts and a reconciliation statement reconciling the value of supplies declared in the return furnished for the financial year with the audited annual financial statements and such other particulars as may be prescribed. Then let us come on to the rules part of connected with these sections. Now, every registered person, Rule 80 sub Rule 1 says that every registered person other than an ISD, a person paying tax under section 51 or 52, a casual taxable person or a non-resident taxable person shall furnish an annual return. This rule is almost the replica of section 44 as prescribed under section 44(1), electronically in Form 9 through the common portal, either directly or through a facilitation center notified by the Commissioner. Provided that a person paying tax under section 10, that is composition taxpayer, shall furnish the annual return in Form GSTR 9A. Rule 80 sub-rule 2 says that every electronic commerce operator required to collect tax at source under section 52 shall furnish annual statement referred to in subsection 5 of the said section in form GSTR 90. Sub-rule 3 says that every registered person whose aggregate turnover during a financial year exceeds 2 crore. Now this is important because it is specifying the turnover. Here the term used is aggregate turnover. So every registered person whose aggregate turnover means PAN-based turnover on all India basis during a financial year exceeds rupees 2 crore rupees shall get his accounts audited as specified under section 35(5) and he shall furnish a copy of audited annual accounts and a reconciliation statement duly certified in form GSTR 9C electronically through the common portal either directly or through a facilitation center notified by the commissioner. So this is how the provisions of law are contained into GST law. Now, if we see the overview of Form GSTR 9, we will find that the new annual return is supposed to be simpler and easier for taxpayers, but the closer scrutiny of form ensures that annual GST return seeks additional details from taxpayers. Annual return part 1 contains basic details. It contains table 1 where we have to mention financial year, table 2 we have to mention GST, table 3A we have to mention legal name, table 3B we have to fill trade name. So we will in the coming slides we will be explaining how these tables or subtables are to be filled. So annual return is comprising total six parts. The part 1 is containing basic details. Part 2 contains details of outward and inward supplies made during the financial year. So it contains further 2 tables. Table 4 contains details of advances, inward and outward supplies made during the financial year on which tax is paid. I think lawmakers is only concerned with this table 4, that how much are the advances or inward supply or outward supplies on which taxpayer is liable to pay tax. Then there is table 5 which contains details of outward supplies made during the financial year on which tax is not paid. Lawmakers are equally concerned with such supplies on which tax is not payable because of the reason that the taxpayer may claim his supplies to be non-taxable or tax may not be paid on them because of the reason they may be like exports against LUT. So such kinds of supplies may be cross-verified by the lawmakers. Then part 3 contains details of ITC. It contains 3 tables. Once again, table 6 contains the details of ITC availed during the year. And table 7 contains the details of ITC reversed and ineligible ITC for the financial year. Table 8 contains other ITC related information. We would be studying these table 6, 7, or 8 in detail in the coming slides. Then part 4 contains details of tax paid as declared in returns filed during the financial year. It contains only one table, that is table 9, details of tax paid as declared in returns filed during the financial year. We would be making a detailed study of this table 9 in the coming slides. We are at present going through a very bird eye view of the whole form, which is comprising in 6 parts. So what these different parts are containing, what kinds of tables they are containing. And after having a bird eye, we would be entering into the detailed discussion how to fill up this one. Part 5 contains particulars of the transactions for the previous financial year declared in returns of April, September of current financial year or up to date of filing of annual return of previous financial year, which are these earlier. No doubt you can read these. April to September, up to April to March 2019. We will be discussing this aspect very soon. It contains now 5 tables. This part 5. Table 10 contains supplies oblique tax declared through amendments, that is net of debit notes, means thereby what kind of amendments etc. you have made to which the supplies have. increased in the subsequent years, and what kind of credit notes or amendments you have made through which your tax liability or your outward supply got reduced. Now, there may be two kinds of amendments a taxpayer might have gone through. That there may be unilateral type of amendments. Suppose I punched a particular invoice which was of rupees 10,000 as rupees in my GSTR 1. So this is a unilateral kind of mistake. The buyer might have entered 10,000 only. So I would be correcting this particular invoice through my table 9 of GSTR 1 in the subsequent period. Same way, there may be mistakes which are of bilateral nature. Suppose they should be a credit note to a person for price variance or for goods, etc. So those issues we will be discussing while we will discuss upon table 10 and 11 in detail. Table 12 contains reversal of ITC availed during the previous financial year. So you might not have paid to a supplier within 180 days, or there may be many other reasons for which you may be making the reversal of ITC during the subsequent period. You might have bought certain goods for which you might have claimed the ITC, but later on you realize that these goods are not used for the purposes of making taxable supplies, and such goods are basically used for the purposes of making exempted supplies. So you may be in a mood to carry a reversal of ITC at the time when it comes to mobile charge. Table 13 contains ITC availed for the previous financial year. So in subsequent years, there may be reasons that you might have received some invoice quite late, and you claim the ITC on that particular invoice in the subsequent year. Table 14 talks about the differential tax paid on account of declaration in 10 and 11 above. In 10 and 11, you might have increased or reduced your outward taxable supply, but for that reason, that there may be some additional liability you have mentioned here. Now, part 6 contains other information, like table 15 talks about particulars of demands and refunds. Table 16 talks of information on supplies received from compulsion taxpayers. You see, while filling either from 3B or GSTR 1, the taxpayers never demanded from us this information that how much purchases you have made from compulsion taxpayers. So we have to carve out such information from the books of accounts maintained by the taxpayer with a deemed supply under section 143 and goods and on basis. Such are the areas which we will be discussing in detail and the challenges ahead of us while filling up these information at our places. Table 17 contains a HSN-wise summary of outward supplies, which we normally give in GSTR 1 form. In table 12. Other information, table 18 contains HSN-wise summary of inward supplies. This information is also new, and it will be difficult for the taxpayers to comply with this. 10% and above inward supplies are supposed to be given HSN-wise. And then the late fee table and page. So if you submit your form late, then there are consequences of payment of late fee, which we need to mention. Now there are certain issues while filling form GSTR 9. We will be taking these issues at a little later time, but before that, we would like to give you a glance how to fill up form GSTR 9. See, this is exactly the reproduction of GSTR from 9, and after every subtable we would be discussing about the instructions given by the PVC which are appended below the very said form, and we may be giving our comments or cautions or guidance how to fill up this form or what kind of challenges we may be facing while filling up this form. So, at the very first part one, there is table one relating to information seeking financial year. All these information will be auto-populated in case you find that your auto population is not correct. So you are always welcome to edit those particular fields. But wherever you find that the information is correct, you may go ahead. So financial year we have to write from 1st July 2017, GSTN is auto-populated, legal name you very well know, like myself, Virender Chauhan. This is my legal name, but I'm doing my business in the name of AVC and Company, Chartered Accountants. So that is my trade name. So you very well know Amalgamated Bean Coffee Company Limited is having its trade name as Coffee for Cafe for Today, normally called CCD. Before we embark filling up second part of this form, where we have to fill up the details of outward supplies, taxable as exempted. Let us first discuss below some general instructions in relation to the entire Form 9. It says in first instruction that it is mandatory to file all your Form GSTR 1 and Form GSTR 3B for the financial year 2017-18 before filing this return. The details for the period between July 2017 to March 2018 are to be provided in this return. So earlier there was a situation that there were certain return defaulters, so the question arose whether they are supposed to file Form GST or 9. The lawmakers understood that fact and they provided this general instruction below Form 9. Then second instruction is that it may be noted that additional liability for the financial year 17-18 not declared in Form GSTR 1 and Form GSTR 3B may be declared in this return. This is getting a lot of discussion amongst professionals that whether GSTR Form 9 can be utilized for the purposes of making additional liability to be discharged. However, taxpayers cannot claim ITC and claims during financial year 17-18 for this return. Means ITC won't be allowed through this form, but further taxes can be paid, which looks quite ambiguous on the part of the administrators of law. Now we enter into part 2. You see the details of outward and inward supplies made during the financial year. This is creating some questions into or amongst the businesses and the professionals that what this statement means, details of outward and inward supplies made during the financial year. We will be discussing this particular issue, that what does it mean, made during the financial year. In fact, if part 2 contains a particular title, whether we have to go with the theme of the title or we have to go according to the precise instructions given below every table or after every subtable, we have to see that particular aspect. So table 4 is titled as details of advances, inward and outward supplies made during the financial year on which tax is payable. So this made during the financial year shows that whatever supplies are there in your books of accounts, probably a taxpayer has to go with those figures, and information contained in Form 3B or GSTR 1 have nothing to do. This is not true. We have to understand the GSTR Form 9 in totality, and we would be discussing at appropriate time whether this Form 9 is to be filled from information contained in the various returns forms like B and 1, or it is to be filled with books of accounts. And we would be bifurcating our discussion for those who are below 2 crores and who are above 2 crores. Instruction. It may be noted that all the supplies for which payment has been made through Form GSTR B between July 2017 to March 2018 shall be declared in this part. Now, this particular instruction is not peri materia with the instruction which I read earlier. You see, this is the instruction I read earlier. It is mandatory, and then it may be noted that additional liability for financial year 17-18 not declared in 1 and in B may be declared in this return. This is instruction number 2, and then this instruction is also contained below table 4, which is just the title of the table. Sub-tables are yet to be started to be filled. Here it is written that it may be noted that all the supplies for which payment has been made through Form GSTR 3B between July 2017 to March 2018 shall be declared in this part. So these two instructions, which are of general nature, are in contradiction to each other. Therefore, there arises a conflict or issue whether this Form 9 is to be filled based on the books of accounts or based on GSTR 3B. So we would be taking certain examples that there may be a figure in 3B, there may be a different figure in GSTR 1, and there may be a different figure in books of accounts. We would be taking examples at appropriate time, and we will be making discussion on these issues. This is the beginning of basically filling up this particular form, wherefrom we have to start filling up the facts and figures. The first table is for capital A. It is titled as Supplies Made to Unregistered Persons, B2C. Now, this particular title is not peri materia with the title given on the top of the table. Supplies made to unregistered persons. Now, supplies made to unregistered persons, we have to restrict B2C supplies to be read along with the instructions given below the form. The first instruction says that aggregate value of supplies made to consumers and unregistered persons on which tax has been paid. Now suppose you have not paid the tax and you want to pay further tax. Whether you can write that particular figure in 4A or not. Just think, I would answer this question very soon. To include details of supplies made through e-commerce operators to be declared as net of credit and debit notes. Means B2C supplies normally we fill up in GSTR 1 also net of debit and credit notes. Therefore, this information has been stored here, and the source of this particular information, the lawmakers has referred that you can take these information from Table 5 B2C large, Table 7 B2C others, Table 9 amendment for B2C large, Table 10 amendment for B2C others. So these are 4 tables which are containing in GSTR 1 form the details of your B2C supplies. Let me raise a question here. Suppose in GSTR 1 form, in these 4 tables, my net B2C supplies is say rupees 1 crore. And in form 3B, I have declared 1 crore 20 lakhs. And my books of accounts contain figures 1 crore 40 lakhs. Means GSTR 1 contains 1 crore 3B contains 1 crore 20 lakhs. Books of accounts contains 1 crore and 40 lakhs. So I have three figures in relation to my B2C supply. Instruction number 1 says aggregate value of supply is made to consumers and unregistered persons on which tax has been paid. So I have paid taxes on 1 crore and 20 lakhs rupees, that is through form 3B, and on another 20 lakhs I have yet to pay the tax. So my view here is that we should fill figure here 1 crore 20 lakhs. Now how you will deal with the figure of another 20 lakhs which is yet to be reported and is being contained in books of account? I will answer that question a little later. Table 4B. Supplies made to registered persons. B2B. Aggregate value of supplies made to registered persons, including supplies to UINs on which tax has been paid. Once again, I am emphasizing on the word on which tax has been paid. Now, this statement is not ambiguous. This is categorically stated that on which tax has been paid. To include details of supplies made through e-commerce operator, not to include supplies on which tax is to be paid by the recipient on RCM. I have not to include those outward supplies made to B2B on which the recipient is liable to pay tax. And details of credit and debit notes to be mentioned separately. So in case of B2C, I was supposed to net off my credit and debit notes, but in case of B2B supplies, the debit and credit notes are to be given separately. The source of these information are 4A and 4C of GSTR 1. B2B supplies other than those attracting reverse charge are contained in 4A, and B2B supplies through e-commerce operator attracting TCS are contained in 4C. So from these two tables, I have to bring this information and put at place at 4B. Zero rated supply export on payment of tax, except supplies to SEDGE, I have to fill up in 4C. Aggregate value of exports, except supplies to SEDGE on which tax has been paid. And this particular information we have to carve out from table 6A of GSTR 1. And here we are giving the caution that table 6A contains details of exports with payment of tax and without payment of tax. So out of this gross figure, we have to carve out the figure where we have to say that exports are made after payment of taxes. 4D, supplies to SEDGE on payment of tax. Aggregate value of supplies to SEDGE on which tax has been paid. Once again, we know that if we want to make sales to SEDGE, we have both the options, either to pay tax or to supply to SEDGE against LUT. So this figure we have to carve out from 6B, supplies to SEDGE. Once again, the same caution that table 6B contains details of supplies to SEDGE with payment of tax and without payment of tax. Deemed exports. Aggregate value of supplies in nature of deemed exports on which tax has been paid. Deemed exports are not zero-rated. There is no two options in case of deemed exports, whether we have to pay tax or not. Deemed exports are taxable. So table 6C contains the details of deemed exports. Here we are giving caution that deemed exports are not zero-rated supplies. 6F, 4F, advances on which tax has been paid but invoice has not been issued, not covered under A to E above. Details of all unadjusted advances. Advance has been received and tax has been paid, but invoice has not been issued in the current year. Categorical instructions are given by the lawmakers, so we have to follow these instructions. while filling up this form. GSTR 1. 11A. Advance received in tax period for which invoice has not been issued. Now we know that table 11 contains the details of advances received, advances adjusted, balance, advances. So all those informations are to be carved out from table 11 of GSTR 1. Here the caution is that in case of goods, no tax is required on advances with effect from 15th November 2017. Inward supplies on which tax is to be paid on reverse charge basis. Aggregate value of all inward supplies, including advances and net of credit and debit notes, import of services, on which tax is to be paid by the recipient to RCM, like GPA services, advocate services, etc. To include supplies received from unregistered persons on which tax is leviable on RCM. We all know that up to a particular period there was liability to pay RCM even on supplies received from RCM from unregistered persons. In Form 3B, such informations are contained in Table 3.1d, inward supplies liable to RCM. Here the caution is that Section 9.4 was deferred with effect from 13th October 2017. So up to this particular date there was a liability, but with effect from this date there is no liability to pay RCM under Section 9.4. Table 4H. This table may be auto-populated and will contain some total of outward and inward supplies on which tax is payable without giving effect to amendments through credit and debit notes or through amendment tables in any subsequent returns. So this table 4H would be auto-populated. Auto-populated means the total of this particular 4H table would be auto-casted by the utility. In 4I, we have to mention credit note issued in respect of transactions specified in B2E above. So that will reduce our outward supplies. And in 4J, we will mention the debit note issued in respect of transactions specified in B2E above. That will enhance our outward supplies. Aggregate value of credit debit note issued in respect of B2B supplies, export supplies to sales and deemed exports can be carved out from table 9B of GSTR. In 4K, we have to fill up supplies or tax declared through amendments. Or in 4L, we have to mention supplies tax reduced through amendments. Details of amendments made to B2B supplies, exports, supplies to SEDGE, deemed exports, credit notes, and debit notes. From table 9A and 9C, we can bring out these information. Now in 4M, we will make a subtotal of I to L, means the total of such adjustments. And in 4N, we will finally come with the supplies and advances on which tax is to be paid, that is H plus M above. Table 4M may be auto-populated and will contain some total of amendments made to the outward supplies on which tax is payable. However, amendment made in financial year 18-19 to invoices pertaining to financial year 17-18 shall not be declared here. Because for that there is a separate part in this form, part 5. Now table 4M may be auto-populated. Auto-populated means auto-total casted, and it is the sum total of outward and inward supplies on which tax is payable after giving effect to amendments declared in the subsequent return financial year 17-18. Now table 5 is titled as details of outward supplies made during the financial year on which tax is not payable. Table 5A now contains instruction aggregate value of exports on which tax has not been paid. This information is to be carved out from table 6A, and the caution is once again the same, that table 6A contains details of exports with payment of tax and without payment of tax. Table 5B, titled as supply to sedge without payment of tax, aggregate value of supplies to sedge on which tax has not been paid. This information we have to bring from GSTR 1 table 6B, and table 6B contains details of supplies to sedge with payment of tax and without payment of tax. 5C, supplies on which tax is to be paid by the recipient on reverse charge basis. These are my outward supplies, and on these my outward supplies I am not liable to pay tax. The recipient is liable to pay tax. Aggregate value of supplies made to registered persons on which tax is payable by the recipient on reverse charge basis. Details of debit and credit notes are to be mentioned separately. So this information is to be brought from GSTR 1 table 4B. In 5D, I have to mention exempted. In 5E, I have to mention nil rated. In 5F, I have to mention non-GST supplies, includes no supply. Aggregate value of exempted, nil rated, non-GST supplies, the value of no supply shall be declared under non-GST supply. This is the instruction given under the account. So even schedule 3 items supply may be there. We have to mention such supplies under this particular head. So such informations are to be carved out from table 8, nil-rated, exempted, and non-GSTR for supplies. 8A, interstate supplies to registered persons. 8B, intrastate supplies to registered persons. 8C, interstate supplies to made URD. 8D, intrastate supplies made to URD. We very well know that table 8 in GSTR 1 contains information of the supplies made to unregistered persons. Here, we are giving certain cautions like nil-rated supplies, although not defined in law, may be taken as those supplies which are notified as such under section 9. Non-GST supplies, although not defined in law, may be taken as those supplies which are non-taxable supplies. Section 278, like liquor or petroleum products, which are non-taxable supplies outside the purview of GST law. No supplies, although not defined in law, may be taken as schedule 3 items. So we have to create some certain inferences for getting rid of filing this, I can say, ambiguous form, HSS, bonded sales, non-taxable territory supplies, they were taken into non-GST supplies, because once again these are the supplies made into the non-taxable territory. So therefore, these supplies are also not covered within the ambit of exempted supplies. Table 5G will contain information A to F above, and the total of this table will be auto-populated and will contain some total of outward supplies and which tax is not payable without giving tax amendments to credit and debit notes or through amendments any subsequent payments. In 5H, we have to mention the credit notes based on which the turnover will decrease and the debit notes based on which the turnover will increase. Aggregate value of credit debit note issued in respect of exports, supplies to sedge, supplies on which tax is to be paid by recipient or RCM, exempted, nil-rated, and non-GST supplies. So, GSTR 1 table 9B contains debit and credit notes information. Whether credit note, debit notes can be issued for exempt supply is a big question. Then 5J contains supplies declared through amendments, and 5K supplies reduced through amendments. And it says the details of amendments made to exports, supplies to sedge, on which tax has been paid, credit notes and debit notes. and such informations are contained in Table 9A and 9C of GSTR 1. In case of exempted supply is declared as nil rated supply in 1 or B, whether it can be corrected in form GSTR 9 is a question. We will cumulatively deal with the issues and we will be applying such questions in totality while considering the issues. So table 5L is a subtotal of H to K above and 5N is the turnover on which tax is not paid. Earlier in 4N we came to know the total supplies on which tax is paid and 5N the total on which tax is not paid. The total of table 5L may be auto-populated and will contain some total of amendments made to the outright supplies on which tax is not payable. However, amendment made in FY 18-19 to invoices pertaining to FY 17-18 shall not be declared here. The total of table 5M may be auto-populated, and it is the sum total of outward supplies on which tax is not payable after giving effect to amendments declared in any subsequent return in 17-18. Now 5N contains total turnover including advances. 4N plus 5N minus 4G above. That is, this table, total of this table may be auto-populated. Total turnover including the sum of all supplies with additional supplies and amendments on which tax is payable and tax is not payable, including amount of unadjusted advances. However, this shall not include the aggregate value of inward supplies on which tax is paid by the recipient on RC. Now, this 5N is a significant information. Significant because of the reason that this is the total which is going to be taken up while making audit under Section 35.5 and in Form 9C reconciliation. This is the total turnover, and finally this turnover will be incurred with the adjustments made in the subsequent period. This is not the turnover as per it is the turnover as per valuation rules of GST. It may include the value of expenses like packing expenses, transportation charging, etc. if they are charged in the invoice. Once again, I am saying it is the turnover as per valuation rules of GST. It may include the value of expenses like packing charges, transportation charges, etc. if they are charged in the invoice. Suppose I paid rupees 500 freight with GT and recovered this 500 rupees from my customer. So I opened a freight account wherein I debited and credited this transportation charges. But on 500 rupees which I claimed from the customer, I am paying GST. So in my returns, this 500 will go as a turnover which is taxable, whereas in my books of accounts, it won't reflect as a turnover since I am netting off this expense. So this is how we have to be very prudent whether we have to take shelter of books of account or various returns, etc. It may include the value of supply without consideration. I might have given a particular material to some of my branch for no consideration. But in GST, it is a taxable supply. So within the books, it may not be a supply, but in GST point of view, it is a supply. Now, table 6 contains information relating to part 3 contains 3 tables, 6, 7, and 8. Let us see what 6 is. Details of ITC availed during the financial year. Total amount of ITC availed through Form GSTR. Sum total of table 4A. ITC available of Form GSTR means thereby this particular table 6A would be auto-populated and will not be editable. So whatever ITCs we have claimed in Form 3B in Table 4A, those would be auto-populated here. Total ITC availed in Table 4A of Form GSTR 3B for the taxpayer would be auto-populated. 6B. Inward supplies other than imports and inward supplies liable to reverse charge, but include services received from such. Total ITC availed is to be classified as ITC on inputs, capital goods, and input services. You see, here in 6A, we are first mentioning the total ITC claimed by us. Now we are starting to give the bifurcation of the total ITC. The first bifurcation is ITC on inward supplies, all domestic inward supplies, you can say. And the ITC on all domestic inward supplies are to be bifurcated in three categories. One is inputs, another is capital goods, and in input services, which normally we do not declare in such a format in Form 3B. So we have to make a calculation of the total ITC claims into these three segments. Books of accounts would be consulted for this purpose. This shall not include ITC which was availed, reversed, and then reclaimed in the ITC value. This is to be declared separately. So this particular aspect is to be taken care of, that in each table we have to mention only the precisely that particular information which is given in the instructions below Form GSTR. This information we have to bring from table 3B in 4A5, all other ITC. Caution, inward supplies may be read as ITC on inward supplies. The very title of this subtable 6B is inward supplies other than so. So that particular title we have to read as ITC on inward supplies. We are not supposed to give the details of inward supplies or purchases here. We are supposed to restrict ourselves only to the extent of ITC on those inward supplies being claimed by us in Form GSTR 2. Inward supplies received from unregistered persons liable to reverse charge other than B above, on which tax is paid and ITC availed. We see now in earlier table we are saying inward supplies other than imports and inward supplies liable to reverse charge but include supplies received from such. Now in this particular table, inward supplies received from unregistered persons liable to reverse charge. Inward supplies received from unregistered persons liable to reverse charge other than B above, on which tax is paid and ITC availed. Aggregate value of ITC availed on all inward supplies received from unregistered persons other than imports of services on which tax is payable on RC. Total ITC availed is to be classified as ITC on imports, capital goods, and input services. So this information we can bring from 4A3 of GSTR 3B. And here we have to say that inward supplies may be read as ITC on inward supplies. These kinds of small mistakes the monitors are supposed to make. 6B. Inward supplies received from registered persons liable to reverse charge other than B above, on which tax is paid and ITC availed. Inward supply is received from registered persons liable to reverse charge. Aggregate value of ITC availed on all inward supplies received from registered persons on which tax is payable on RC. The total ITC once again availed is to be classified as ITC on imports, capital goods, and import services. This information once again we have to bring from the same column, that is 4A3. Inward supplies may be read as ITC on inward supplies. 6A. Import of goods including supplies from search. Details of ITC availed on import of goods including supply of goods received from search. Total ITC availed is to be classified as ITC on imports and capital goods. So this information we have to bring from 4A1. ITC on import of goods in 3B. Caution: import of goods may be read as ITC on import of goods. Import of services, excluding inward supplies from such. So details of ITC availed on import of services, excluding inward supplies from such. 4A2, ITC on import of services. Import of services may be read as ITC on import of services. ITC received from ISD. Same way, this information is to be taken from 4A4. Then 6H, amount of ITC reclaimed. Aggregate value of ITC availed, reversed, and reclaimed. This information was not required in form GSTR. Like in 180 days, we reversed first ITC, then we paid the amount after 180 days, and we reclaimed. So amount of ITC reclaimed is to be taken here. 6I subtotal B2H above, 6J difference I minus A above, and the difference between the total value of ITC availed through form GSTR 3B and ITC declared in the B2H. Ideally, this amount should be 0. Whatever amount you have claimed in 3B and the above tables, we are just filling up the bifurcation of those claims. So ideally, this amount should be 0. 6K, transition credit to train 1. Including revisions if any. Details of transition credit received in the electronic credit ledger on filling of form GST Train 1, including revision of Train 1, whether upwards or downwards. The period for submitting declaration in Train 1 extended till 31st March 2019, and due date of filing form GSTR 9 is 30th June 2019. So there is similarly Train 2 credits we might have availed, and then any other ITC availed but not specified above, maybe details of ITC availed but not covered in any of the heads specified under 6B2L above, details of ITC availed through form ITC01, claim of ITC in special circumstances, and form ITC02, transfer of credit in case of transfer of ownership, merger, etc. You see in form ITC01, we normally claim ITC in case of transfer of business from one person to another, merger, demerger, or inheritance of business, etc. in case of death of the proprietor, etc. And in form ITC02, in the case of ITC01, we normally make claims in special circumstances, like we went for a new registration or a voluntary registration, or from composition to regular, or from exempted to our supplies became taxable, and from ITC02. We make claims of ITC in case of transfer of business. So 6N will contain A to M above, and 6O contains will ITC availed from I to M above. The total of table 6N may be auto-populated and will contain details of transition credit and any other credit. The total of table 6O may be auto-populated and contain details of total ITC available, including credits on imports, credits received from ISD, transition credits, or any other credits. Then comes table 7. Table 7 contains details of ITC reversed and ineligible ITC for the financial year. Table 7A talks about reversals after 180 days, which normally SMEs or industry probably not doing, because the industry is of the view that this is an unwarranted reversal, and after a few days they are supposed to make the payment to the supplier, so once again they have to reclaim. So we have experienced that most of the taxpayers are defaulting on this particular aspect. Then there are Rule 39 ISD credit reversals because of wrong distribution, or Rule 42 proportionate credit reversals, or Rule 43 proportionate credit on capital goods reversals, and as per Section 17.5 block credits reversals. So we have to be very cautious while filling up these forms, these subtables. Like in Section 17.5 bulk credits, ineligible credits, like if I have gone and taken food in a restaurant, so I probably might have expensed of that particular credit. I might not have declared this particular ineligible credit in my Form 3B, and even if I have declared, that is only a memorandum entry, and it may not be grossed up earlier in 4A first and then reversal in the memorandum entry thereafter. So such kinds of precautions one has to take care of. Details of ITC reverse due to ineligibility or reversal required under Rule 37, 39, 42, and 43 of the CGST rules, and IT reversed in Section 75 of the CGST 2017. So 4B contains such information of ITC reversed. From there, we have to pick up such information. Here, instruction is given by the CVC itself that if the amount stated in Table 4D of Form GSTR 3B was not included in Table 4A of Form GSTR 3B, then no entry should be made in Table 7E of Form GSTR 9. However, if the amount mentioned in Table 4D of Form GSTR 3B was included in Table 4A of Form GSTR 3B, then entry will come in Table 7E of Form GSTR 9. This is very important instruction. One has to read it again and again. So in 7F, we will talk about reversal of Time 1 credits, 7G reversal of Time 2 credits, and details of ineligible transitional credit claimed under Form GST Time 1 and Time 2 and then reversed. So this information is also contained in the B table itself. Then for H, other reversals may be there, like any ITC reversed through from GST ITC 03, like pay ITC from taxable to composition, and in table 3B, this information is once again contained in the B2. 7I total ITC reversed, 7G net ITC available for utilization, and then the total of tables I may be auto-populated and it contains some total of total ITC reversed on account of Rule 37, 39, 42, 43, 75, transitional credit or any other reversal. The total of 7G finally may be auto-populated and may contain details of net ITC available for utilization, total ITC available, total ITC reversed. Now comes table 8, which will talk about reconciliation of your claims with Form GSTR 2A. Earlier, we tried to reconcile our claim made in Form 3B, bifurcating various kinds of claims, and now we will reconcile the information contained in GSTR 2A with our claims. So this particular table A is a total credit available for inward supplies other than imports and inward supplies liable to reverse charge, but includes services received from such pertaining to financial year 17 and reflected in Form GSTR. The aggregate of all the ITC that has been declared by the corresponding suppliers in the Form GSTR 1. What if conditions of Section 16 has not been complied with will Form GSTR 2A allowed to take credit? Our opinion is yes, that even if some credit is not reflecting in Form GSTR 2A, still on the basis of the invoice in hand, we should claim the credit in our GSTR 3B. We are likely to close our discussion how to fill up this form, and very soon we will be discussing the contentious or vital issues in relation to this form. Just bear with us for a little more time. 8B column will be auto-populated, which is the ITC as per sum total of 6B and 6H above. You see, and the ITC as declared in table 6B, that is ITC on all inward supplies other than imports and inward supplies liable to RCM, that includes services received from sales. And 6H contains amount of ITC reclaimed payment made after 180 days. Then 8C contains ITC on inward supplies other than imports and inward supplies liable to reverse charge, but includes services received from sales received during 7 and but availed in subsequent years. The aggregate value of ITC availed on all inward supplies, except those on which tax is payable under RCM, but includes services received from sales received during 7 and but the credit on which was availed in subsequent year. This particular information can be taken from 4A5. Now 4A5 contains the gross figure of your claims under ITC, but in case here you have claimed ITC of the current year as well as of the previous year, then there would be some calculation summary with you while filing this particular form. From there you have to carve out such information. Then there would be a difference A minus B plus C, and if this difference is positive, if the normal available but not available, means thereby that your 2A is lesser and your claims are lesser and your 2A is higher. In that particular case, the lawmaker says no objection. So if this difference is positive, because A contains information in relation to your 2A figure and B plus C contains information about your claims made. So this difference, if it is positive, it is very good, it is normal, it is available but not availed. You might have still not availed your complete ITCs. And if this difference is zero, then you are claiming that there is no ineligible credit, but if difference is negative, then there may be situations of wrong availment or supplier not uploaded invoice in GSTR1. As per instructions, there may be circumstances where the credit availed in B was greater than credit available in 2A. In such cases, value shall be negative. 8E contains information relating to ITC available but not availed, and 8F contains ITC available but ineligible. So the credit which was available but not availed in Form B, and the credit was not available in B, as the same was ineligible, shall be declared here. Ideally, if 8D is positive, the sum of 8E and 8F shall be equal to 8D. So we have to see here that ITC extents of are very difficult to report. So the ineligible situation would always be likely to be zero. Instruction silent while referring to table 4D of GSTR 3B, taxpayer may declare fresh information here. 8G talks about IGST paid on import of goods. 8H talks about IGST credit availed on import of goods. And 8I is talking of difference. And 8J is talking about ITC available but not availed on import, of course. Aggregate value of IGST paid at the time of imports, including imports from search during the financial year. ITC declared in table 6E shall be auto-populated. ITC of 1718 availed during 1819. Ineligible ITC. What about import of services? So these are the issues which are to be discussed with. 8K will be auto-populated, that is total ITC to be lapsed in current financial year. E plus F plus J. E stands for ITC not availed, F stands for ITC ineligible, and J stands for ITC not availed on imports. The total ITC which shall lapse for the current financial year shall be computed in this row. So if your 8K is containing certain information, lawmakers will be happy. Computation of ITC lapse is not conclusive. It is better if total 8K is equal to 8F. Then how to file form GSTR 9 part 4 contains details of tax paid as declared in returns filed during the financial year. You see, this particular table contains various columns. The first column is the description of type of tax like IGST, CGST, SGST, cess, interest, late fee, penalty, etc. And what is your tax payable and how much paid through cash and how much paid through ITC. So this particular table may be analyzed by the lawmakers tomorrow, that how much taxes you have paid through cash in total for the total financial year. And this particular cash payment may be compared with the industry standards, how much value addition a taxpayer has made while declaring his turnover. So if some say taxpayer might have paid only 1% of the total liability in cash, so he is making a very meager value addition while doing business. But the other industry standard taxpayer may be paying say 15% of the total cash or the total liability. So this is how lawmakers will analyze such information through digital analysis. Actual tax paid during the financial year, payment of tax under table 6.1 of GSTR 3B can be captured. Source of tax payable, GSTR 3B or GSTR 1. These are the issues which we are likely to discuss. Then part 5, particulars of the transactions for the previous financial year declared in returns of April to September of financial year or up to date of filing of annual return of financial year, whichever is best. So now part 5, I'm just summing up, will contain all those adjustments to debit note, credit notes or amendments, etc. Or you might be escaping certain claims of your ITCs, or you might be escaping certain outward supply bills being escaped. So there are provisions within the law that in the subsequent year, up to September, you can always claim your ITCs, and for unlimited period of subsequent period, you can declare your outward supplies and pay taxes. The lawmakers extended this September date to March, so up to March, whatever GSTR 1 of your inward suppliers are lifted, and whatever input tax credits you claimed up to March 2019 returns, those would now be reflected in Part 5 as a matter of adjustments during the subsequent period. So, for the brevity of discussion sake, I am just skipping this Part 5, which is almost self-explanatory how to fill up this particular table 10 and 11, 12, and then 13 table, and then 14 table, which creates your differential tax paid on account of declaration in 10 and above means whatever adjustments you have carried into the subsequent year, how much differential tax is likely to be paid under various heads like IGST, CGST, etc. So here we end discussion on part 5 of this GSTR Form 9, and from here it starts And the last part, which is part 6, which contains information relating to your demands and refunds, claimed, sanctioned, rejected, pending, etc. And then in table 16, we are supposed to tell information on supplies received from composition taxpayers, deemed supplies under section 133, that is goods being sent on job board, and the goods being sent on approval basis, etc. Then in table 17, we are supposed to tell in this form 9 about the HSNY summary of outward supplies, which is very common that up to a turnover of 1.5 crore, we need to tell HSN. Beyond 1.5 to 5 crores, we are supposed to tell 2 digits, and beyond that, 4 digits. Same way in table 18, we are supposed to tell HSNY summary of inward supplies. So this seems to be a Herculean task, but lawmakers have given some relief that only those inward supplies would be liable for mentioning HSN code, which are in excess of 10% of the gross inward supplies. These are the details relating to HSN mentioning, etc. So finally, table 19, we have to tell if our form GSTR 9 is late, whether we are liable to pay some late fee and whether we have paid that particular fee. These are the details to be filled in form GSTR 9, and we are of the opinion that word file to insert some description, explanation should be provided at the end, so the transactions which are reported by mistake or left out or incorrectly reported and which are very difficult to correct via subsequent GSTR 3B or 1E1H for the circular number 26 for any region can be explained by the taxable person, and hence it can act as a disclosure tool in connection with the concealment part specified in the verification of the name. This is the filing process of this particular utility, which is self-explanatory, which is available on GSTN website also. You can go through this particular process, and then we are capturing important FAQs released by CBC, which are also contained in this particular PPT. You can go through themselves, they are self-explanatory, and this is how I conclude my discussion as far as filling up this particular form is concerned. This paper is comprising about 140 slides, so the rest you can see right here on. Now I'm coming back to the important issues to be discussed now in relation to filling up of this GSTR 9. Let me open my those slides where I wanted to discuss issues. But before this discussion of those issues, I have taken you at a glance into the journey of the drafting and the instructions of this annual written form 9. In case of any difficulty, you can really look into this particular PPT and seek help how to fill up this form. So these are the issues. Issues in Form GSTR 9. Let us discuss one by one general issues in Form 9. Must be a compilation of return, should be auto-populated, but requires manual furnishing of information also. The lawmakers claim that the information in this Form 9 would be auto-populated. But you see, in Form 3B, we are having 6 tables. Table 1 and 2 contains basic information. Table 5 contains information in relation to exempted inward supplies, and table 6 contains information relating to taxes paid. So fundamentally, there are only two tables in Form GSTR 3B. That is table 3, which contains information relating to outward supplies, and table 4, which contains information relating to input tax credits claim. Same way in Form GSTR 9, GSTR 1, although there are 13 tables, but table 1, 2, 3 once again contains information in relation to basic details, and table 8 contains information relating to exempt supplies, 9 and 10 relating to adjustments, 11 advances, 12 HSN, 13 details of documents. Fundamentally, in Form GSTR 1 also, the vital tables are table 4, table 5, table 6, and table 7 also contains information relating to B2C supplies, which are taxable of small nature. So 4, 5, 6, 7, these are the 4 tables which contains vital information in totality in relation to outward supplies. Whereas Form GSTR 9 contains 6 parts, 19 tables, and almost each table is further subdivided into sub-tables comprising more than 10. So about more than 200 rows we have to fill up. Means thereby the information sought in Form GSTR 9 are so precise that those informations cannot be auto-populated neither from Form 3B nor from Form 9. Therefore, whatever auto-population is there, barring one or two information like the figure from 2A or the ITC claimed in 3B, these are the frozen auto-population. Besides that, all other tables are subject to editing, and a taxpayer has to fill up this form, and he has to carve out all these informations from the books of accounts or GSTR 3B or GSTR 1. So finally, we would be discussing whether these informations are to be filled from B or 1 or books of accounts. This is the issue to be taken up before we finish up other issues. What about taxpayers who shifted to composition scheme in mid of the year? Now, if a taxpayer has shifted from composition to regular, then he has to fill two forms. One for the composition taxpayer in Form GSTR 9A and another in Form 9B for respective periods. Whether cross charge need to be considered in furnishing information for annual return. Wow. Cross charge is a situation where either the income or the expenditure pertains to some other unit of the taxpayer. Certainly, I am of the opinion that cross charge is a significant levy in the hands of a tin holder. So this cross charge is to be considered while furnishing the annual return. So this we would be discussing in detail. Whether pre-GST supplies affected post-GST requires reporting. Certainly, if those pre-GST supplies made or affected in post-GST are of nature of supply, then those would be definitely considered while filling up this form. What about cancelled dealers? CBC itself in its FAQ has stated that all cancelled dealers, either by Sumoto or by the Revenue Department, are also supposed to fill up their Form GSTR 9. Annual return is still not the return to rectify the mistakes committed in GSTR B or 1. This is something which I would like to discuss in detail, whether all the mistakes committed while filling up or filing various returns in various forms like in Form 3B or in Form 1, whether this annual return is a option or this is a chance or this is a mechanism, or whether the intentions of the lawmakers is to rectify of your mistakes through this annual return. My answer to this is almost no, and let me explain my viewpoint about whether this GSTR Form 9 is to be filed by capturing information from Form 3B or from GSTR 1, or the information as contained into the books of accounts. Now let me cite one example. Suppose in my GSTR 3B, I have declared a turnover of rupees 1 crore and 20 lakhs rupees, on which I have discharged my tax liability. Whereas in my GSTR 1, this information is 1 crore. But in my books of account, my taxable turnover is 1 crore and 40 lakhs. So while answering whether I can rectify my this turnover in my annual return, I have to bifurcate the taxpayers in two parts. The taxpayers whose turnover is below 2 crores rupees, they are not subject to GST audit. In those cases, I recommend that the taxpayer should rectify his mistake by declaring higher, higher turnover, that is 1 crore 40 lakhs rupees. And any other mistakes, except any claim of further ITC, he should rectify while filing this annual return. And in case he has short paid the taxes, he can further pay the taxes after filing this annual return with the mechanism of DRC3. So in DRC3, when he would be paying the tax, he would choose the option annual return. And in the times to come, the lawmakers will issue a DRC7 form, that is a demand notice, a short of assessment order, against the taxpayer to justify the claim received from the taxpayer of that DRC3 form. So this is how the small taxpayers can mitigate their various kinds of mistakes committed while discharging their compliance of filing of various kinds of returns. Now let us come to the point of those taxpayers which are of higher magnitude, that is whose turnover is rupees 2 crore and above. Those taxpayers are no doubt are liable for audit in terms of the provisions as contained under section 35. Not only their one unit, but almost their entire units which are situated at multi locations, either within the state or outside the state, are subject to GST. And a reconciliation statement has to be made in their cases. And that reconciliation statement is nothing but the information of sales, outward supplies, inward supplies, ITC as contained in Form 9 with that of the books of accounts. So in my books of account, if I have captured a different turnover or claims different ITCs, those are to be reconciled with Form 9. In those situations, I am of the view that the total of GSTR 3B turnover on which taxes have been paid, those turnovers should be reported in Form 9. Now suppose I have declared a different figure, either higher or lower, in GSTR 1. I have nothing to do with that. So based on the information of my outward supplies on which I have paid taxes, I have to fill up my formula. Similarly, I might have made certain claims in my 3B, but I may be having more claims, or I might not have claimed in full. So whatever claims I have made in 3B, either while filing the returns for the year 2017-18, which is the year in question, or I might have made certain of my claims of ITC, or I might have declared my turnovers of earlier year into the subsequent year, that is 18-19. All those claims cumulatively I have to declare in Form GSTR. So any kind of mistake, either on account of ITC or on account of outward supply, which is there into the books of accounts, and I want to so much to declare them. In 9C, there is a fantastic provision of reconciliation, and the form 9C starts with the reconciliation statement of our turnover of our ITCs uh, as per books of accounts, and then I have to analyze various differences, and then I have to conclude that what is my turnover of ITCs as per form 9. And then there would be a variance if there are mistakes. And then I have to write what are the reasons of those variances. Then there are concluding remarks that in case of various kinds of mistakes I observed, either not declaring of my turnover or non-claim of my ITCs or excess claim of my ITCs, then there are provisions within that form that do you want to pay more taxes? So the first option is with the assessee to discharge his additional tax liability. And there are certain areas or prerogative with the auditors also. If they wish to report some error, like if a taxpayer has not done gross charge and he was supposed to make gross charge, but the taxpayer may be adamant that he do not want to make gross charge. He may be of the opinion that gross charge is not required, but the auditor may be of the opinion that gross charge is required. Let me give you some example, a typical example of gross charge. Suppose there is a ICAI bank, ICICI bank, and there is one Wipro company, both are situated in Delhi. And Wipro received a contract of upgrading all the ATMs of ICICI Bank across India. The transaction was entered, say, for rupees 5 crores. And within a span of another 6 months, the Wipro executed this particular contract across country by utilizing services of its various branches located at various places at various states. So, ICICI Bank paid rupees 5 crores to Wipro, head office situated at Delhi. So, whether this income pertains to that particular head office, entire 5 crore, or this income pertains to various branches across country who actually perform services. Evidently, this particular income is not of head office. This income pertains to the branches and various states. Even the principle of destination-based taxation mandates that the income should go to the appropriate state. So unless those branches declare this particular transaction to be their income by cross-charging the head office of the required ATMs which the particular branch upgraded, it would be a question before the state, and it would be a question into the profit and loss account of that particular branch. If this cross charge is not done, there will be certain branches which are showing loss, and there will be certain branches like head office which may be showing a huge value addition. Therefore, in this particular situation, we are of the view that there should be cross charge made by various branches by raising invoices of the appropriate amount to the HO. At the same time, now this particular ICICI Bank has debited this 5 crore as expenses for upgradation of ATMs into its profit and loss account at CIDEL. But this expenditure is not relevant to the head office. This pertains to the branches. Various branches located across country, and HO ICICI Bank will charge or recover this expense from various branches. So ICICI Bank HO will raise cross charge invoicing to various branches across the state and will reduce its expenditure at Delhi. So respective branches would be paying the appropriate money to the head office. This is how cross charge concept must be seen while conducting or filing GSTR 9 return or while conducting audit in Form 9C. And let me give some other example too. Suppose there is a building in which 4 or 5 companies are same group are going on. But the rent agreement is in the name of one company, maybe the principal company. But this rent pertains to as an expenditure to all companies, maybe in the ratio of utilization of the space, or maybe in the ratio of the turnover, or maybe in the ratio of employee strength, etc. So the parent company who is paying rent must cross charge this particular payment of rent to other companies. So this is how all incomes and expenditures are to be seen in case of multi-located or multi-unit companies or associate concerns that this cross charge should be made. So this is how this mistake is to be rectified at the appropriate place. Whether to report difference of opinion between any additional taxes, efficient difference or POS difference. This is also a significant observation while declaring turnover or discharging tax liability. Suppose there is a classification issue. A particular turnover may be taxable at the rate of 12% in the eyes of the taxpayer, but the auditor or the government may be of the opinion that it should be taxable at the rate of 18%. Let me give you some example. There is chapter 20 or 21 which says about the taxability or the tax rate on ready-to-eat food and semi-finished food. So ready-to-eat food is taxable at the rate of 18%, whereas semi-finished food is taxable at the rate of 12%. So a taxpayer may claim that he is selling semi-finished food, whereas it may be a ready-to-eat food. So such kinds of classification issues may emerge between auditors or in the eyes of the taxpayer, or a particular piece of cloth may be considered as like sari fall as a garment, which is taxable at some other rate, or it may be considered as textile, which is taxable at a different rate. So such kinds of classification issues may emerge. Similarly, place of supply issues may also arise, like there is a mall in a particular state and it is selling electronic items. Customers are coming from across neighboring states also. So, but that particular supplier of those electronic goods are charging C and S instead of I, even if address on record is available while he is issuing an invoice. Normally, such kinds of mistakes are being observed into the field and specifically with SMEs. And they are of the opinion when the customer comes towards the counter and he picks up the goods, it is a local supply. but he is giving the address of outside the state. So law says that it should be IGST transaction. So in this particular situation, the repercussions are very huge. There may be a situation that entire C and S may be reduced to a large extent and liability of IGST may arise. So while filling up this particular form 9 also, one has to become prudent whether he is furnishing correct information or not. As of now, this particular year of 17-18 is a challenging year where mistakes are at alarming situation. So if we start rectifying our mistakes at this particular level, it is quite advisable so that the another concluded year, that is 18-19, may be taken care of for the purpose of carrying various kind of corrections into the subsequent year, that is 1920. And September 2019 is a cut-off date when a lot of mistakes can be rectified. So we are supposed to take up such issues with some bold decisions so that we can create a very good foundation for all the times to come to create our various kinds of ratios like GP rate, net profit rates, etc. Another issue is date of Another issue is date of availing ITC extended to 31st March 2019, but in GSTR 9 details up to September 2018 are required. Now here in part 2, we are supposed to give details of the returns filed for the year 18-19, and in part 5 we are supposed to give details which are relating to earlier year but being carried into the subsequent year up to 31st March 2019 instead of 30 September 2018. Annual return under GST is a starting point for GST reconciliation statement and GST audit. Unless Form 9 is correctly filled, the GST audit cannot start. Because GST audit has to reconcile the total figures as contained in Form 9, specifically in relation to outward supplies, both taxable and exempted, and the input tax credit claim. These two figures are to be reconciled with the books of account turnover. We very well know that the turnover in our books of account and the turnover as contained in various returns may always differ because of the reason that even a branch transfer are taxable under GST. Not only that, the revenue recognition mechanism under GST is different as compared to revenue recognition in income tax or company law. A transaction of sale starting from Mumbai to Delhi may be taxable then and there when the goods moved from Mumbai, but until they reach to Delhi and the buyer acknowledges the receipt of those goods, it may not be a revenue to a Mumbai party or it may not be an inward supply for a Delhi party. So such kind of variances of valuation and taxability of various transactions may tinker the quantum of outward supply as well as claim of ITCs, and a suitable reconciliation is required to be carried by a professional. And finally, it is up to the taxpayer whether he accepts those variances and is ready to discharge additional tax liability, if any, or he wishes to litigate those variances. In case tomorrow the revenue department issues a show cause notice against the taxpayer. So this is how we conclude the noted uh, issues which we thought of very significance while filling up this particular form and to get ready for a GST audit. So our next deliberation will be on GST audit very soon. And with this, I conclude my discussion. And, I have a few questions which I have already covered in my deliberations, so those need not to be repeated once again. Thank you very much.
क्लोज कर दिया आपने? थैंक यू बोल दिया? ठीक है। महेंद्र जी, महेंद्र जी, महेंद्र जी मैं आओ ना देखो। सर ने बोल दिया थैंक यू, फोटो थैंक्स कर दिया। अब इसकी रिपोर्टिंग करना ताकि डाल दे। इसी में हो जाएगी ना रिकॉर्डिंग। आ जाओ भाई साहब आप इधर। वो एक्चुअली इन्होंने क्लोज कर दिया इसको। Thank you, CA Virender Chauhan ji, for a wonderful deliberation on annual return GSTR 9. हमारे कुछ मेंबर्स को प्रॉब्लम आई कि आवाज़ साफ नहीं आई है। हमने कोशिश की, कई बार होता है कि इंटरनेट के लिंक की वजह से वो थोड़ा डिस्टर्ब हो जाता है। और जो सर की पीपीटी है वो और जो ये वेबिनार हुआ है इसकी रिकॉर्डिंग हम आपको सबको पर्सनली ईमेल पे भी, जो हमने व्हाट्सएप का ग्रुप बनाया है इस पे आपको भेज देंगे। किसी को नहीं मिलती आप प्लीज़ हमें कॉन्टेक्ट कीजिएगा, आपको पर्सनली दोबारा से भेज देंगे। आई एम थैंकफुल टू एवरीवन फॉर देयर कोऑपरेशन, फॉर लिसनिंग आवर गेस्ट फैकल्टी CA वीरेंद्र चौहान जी, एंड आई होप इस चीज आपको सबको बहुत फ़ायदा मिलेगा। थैंक यू वेरी मच। थैंक यू।